Hello friends, I hope you all are well at your home. Today we are starting the online lectures of the management accounting and the unit name is cash flow statement. This video is for our final year students of BBA. Cash flow statement, as we all know that what is the role of cash in any business. Generally, the statement which gives the information of changes occurred in the position of cash of a business enterprise during a period of balance sheet of two different dates is known as a cash flow statement. As we know that what is the cash play a very important role in the economic life of a business. A firm needs cash to make payment to its supplier or to pay day-to-day expenses. It is also necessary to pay salary, wages, interest, dividend, etc. In that fact, we discuss that what blood is to a human body, cash is to a business enterprise. That means without cash, we cannot run any business. So that it is very essential for a business to maintain an adequate balance of cash. For example, a concern operates profitability but it does not have sufficient cash balance to pay dividend. What message does it convey to the shareholders and public in general? Thus, management of cash is very essential. And as we know that cash flow statements provide the information about the cash receipt, cash payment, which is also known as a cash inflow and cash outflow of a firm for a given a particular period, or you can say particular date to any particular date. This statement is displaying changes in cash position from one period to another period. This is here I am just giving the example that if the cash balance of business is shown by its balance sheet on 31st March 2018 at 20,000, while the cash balance as per its balance sheet on 31st March 2019 is 30,000. So there has been inflow of cash of 10,000, or you can say cash inflow is there. It is explained the reason for such inflow or outflow of cash. The case may be. It also helps the management in making plans for immediate future. So now let's discuss about the purpose of the statement. Why we are preparing cash flow statement. It provides the relevant information about the cash receipt, cash payment of an enterprise during a period. So the statement provides the answer of the following question: where did the cash come from? That means which are the main sources of your cash? What was the cash used for? Or where we utilize our cash? Or where we applied our cash? In which type of assets, which type of transaction we are using the or utilizing the cash? What was the changes in cash balance? So that type of question, if we have the answer, then this is the basic purpose of cash flow statement. Another one, why cash flow analysis is there. So it is an important analytical tool for creditors, investor and other users of financial statement data. As we know that if any firm, any company want any loan from the financial institute, so financial institute or banker that analyze our cash position or cash analysis by using the cash flow statement, and then they should come or they came to know that what is the financial position of our company. So it provides the firm's ability to generate cash flow in future, firm's capacity to meet cash obligation, firm's future external financial needs, firm's success in productively managing investing activities, firm's effectiveness in implementing financing and investing strategies. So that's why these are the reason that cash flow need analysis. Another point, that is an objective of cash flow statement. So what are the basic objectives? See that highlighting cash flow from different activities. It's highlight the cash flow different activities. That means a transaction which is relevant to the cash. It is a short term planning. If any business enterprise want cash for a short time, so if we are preparing the cash flow statement, we should come to know that what we should done in future for the short term planning. Cash flow information helps to understand the liquidity. what is the liquid position of the company. By preparing this cash flow statement, we should come to know that what is the liquid position or liquid information of the company. Efficient cash management. Nowadays, cash, as we know that it is the lifeblood of business. So each management want efficient cash on a particular time, on a particular day. So that's why we are preparing cash flow statement. Prediction of sickness, comparison with budget, and to know the cash position. So these are the objective of cash flow statement. Now, as we know that some limitation is also there of the cash flow statement. See that it does not show the liquid position of the firm because an income statement takes into account of both cash as well as non-cash items. As we know that cash is a necessary, or you can say lifeblood of business, but cash flow statement only use the data of the previous data. So it will not create another new things, but we are just using the previous year data and we are just trying to know that what are the movement of cash from a particular one date to another date. So that is in first limitation is that it is not a suitable for income statement, does not show the financial position of a firm in a totality because only cash transactions should be covered. Now this is an important points for examination. Difference between cash flow statement and fund flow statements. See that basic difference points, what are in cash flow and what are in fund flow. The first point, that is a basic of accounting. It recognizes cash basic of accounting, whether fund flow is based upon accrual basis of accounting like a working capital. Significance points view, it is useful for a short term while fund flow is for a long term. Schedule of changes in working capital. Such a schedule is not prepared for the preparing cash flow, while changes in working capital should be prepared in fund flow statement. What are the causes of variation? It study only the causes of cash variation, while fund flow is study causes of changes in working capital. Now come to the main points, where from, where to. That means as we know that in the cash flow statement there are basic 2 points is there, cash inflow and cash outflow. So first we should come to know that what are the points or cash comes from. So these are the list of that, and also giving cash goes out, or you can say used of cash or utilization of cash. See, profits, sale of fixed assets, decrease in stock, decrease in debtors, capital introduced, loan received, increase in creditor. So there are the points which are known as a cash come from, or which are the things from which we can earn the cash. Well, cash goes to, that is the losses is there, purchase of fixed assets, increase in stock, increase in debtors, drawing, dividends, loans repaid, decrease in creditor. So that are the things in which we can utilize our cash. Now these are the classification of cash is there. Classification of cash inflow and outflow. As we know that cash flow is divided in 3 categories: operating category, activities, investment activities, and financial activities. In operating activities, we already discussed in our class that generally all the debit things of the P&L account and credit things of the P&L account is considered in the operating activities, or you can say a transaction which run the business or which operate the business. That type of transaction should be covered in operating activities. So all the debit things should be added and all the credit things should be less from that. So that is an operating activities. Investment activities, as we know that any purchase of any sale of property, sale of plant, sale of any debt, so that should be covered in investment activities as a inflow. Well, in outflow, investment activity, purchase of property, plant, equipment, purchase of debt, equity should be covered in investment activity as a outflow. If we discuss about the C category, financial activities, any issue of share, equity share, preference share, debenture, so that should be covered is a cash inflow in financial activities. While outflow financial activities, it should be covered as a payment of any dividend, redemption of debenture, redemption of preference share. So that should be covered in the financial activities. Again, uh, now we discuss one by one three activities: operating activities, cash inflow, cash outflow, any cash sales, receipt from debtor, commission, fees, royalty, that is a cash inflow, or whether cash outflow is cash purchase, payment to creditor, cash operating expense, payment of wages, income tax, manufacturing expense. So that are cash effect, the transaction on net income. So that is an operating activities. In investing activities, or you can say B category, investment activity, inflow consider the sale of fixed assets, sale of investment, interest received, dividend received, working capital recovery. Cash outflow, purchase of fixed assets, purchase of investment or working capital, that is an investment activities. Financial activities, we already discussed that any issue of share, debenture or long term loan borrowing, payment of loan, redemption of preference share, payment of dividend, interest paid, repayment. So that are considered as a financial activities. Now see, these are the preparing a statement of cash flow. Order of presentation: first A activities operating, B investment activity, and C financial activity. These are the three basic sources of information is necessary to prepare the cash flow statement, comparative balance sheet, current income statement, and additional information. Cash flow from operating activities, see that which things should be covered in that: cash received from sales, commission, fees, interest received, cash payment, purchase, payment to and for employees, operating expense, interest payment, direct taxes, etc. Now, preparing the statement of cash flow, indirect and direct method, both method are there. Generally, we are preparing cash flow statement as per accounting standard 3. So this is an important thing. See friends, cash format of the cash flow statement. First thing, cash flow from operating activities, then cash flow from investing activities, cash flow from financial activities, net increase or decrease in cash, that means A plus B plus C. And we are add the cash at the beginning of a period. So finally we should find out the cash at the end of the period. So that is a key factor. If your closing balance and cash at the end of the period should be equal, so that means ki your problem is clear. Thank you very much. If you have any doubt, any question, so you can message me on my WhatsApp number. I am also admin of your groups. Thank you very much friends. Thank you.